Good morning, everybody. Give me a second here. Okay. All right. Well, let's see where things are at. It was a little bit of a relief, obviously, that these banks came out and they actually beat. So let's take a look at them, and then we'll see where the broader markets are. So I am putting this live on YouTube. And so let's take a look at what's going on here. All right. So Citi. And interesting, these banks started to move up yesterday with the markets and, insider information, who knows? It was a good sign that they did. Citigroup stopped at its 200 MA right there, and it is trading at 73.15. So up a bit. The 50 MA is right around there at 73 and 40-ish or so. And I always take a look to see, is it in alignment with some actual resistance? That's what you want to do. When you look at a moving average, you know it's a subjective thing. Look to the left and see if it's in alignment with some reference point of support. And you can see that this is. Now, that being said, the 50 MA on a daily chart on market type stocks, like I would say, big bank stock like this is a market type stock, which means institutions are going to be looking at it. So the 50 MA is a moving average that they all look at, simple moving average, and as well as the 200. I'm not so sure about the 20, but in any event, the 50 and the 200 tend to be very good reference points. BAC is up 51.12, so up nicely. So these may run as I'm looking at this, and I'm thinking to myself, well, they're close to that 50, somewhere near resistance. You want to be aware, as we always are, of the first reversal period, 950 to 1010, because they may just continue to run up until that first half hour and then possibly reverse. And so it's something that we'll be keeping an eye on. And let's take a look what else I got here on the list. This Xylo came out with some news. That might be one for the short side after the market possibly stalls. We'll see if it bounces here. So I know there was some news on that, and that is down. BA had some news about concerns with Russia as far as some whatever they're doing with them, orders, who knows what. But that's up nicely here and looks really good. Like getting above this area here should be able to keep going. And what else is on the list here? Starbucks was actually downgraded today, but it doesn't look so bad. It's up at this resistance area, but it's got some decent support underneath here. So this is an example of something that I would not put on my short list, even though it might go lower. But a downgrade that clears support, those are the ones that, as far as gappers go, to put on your list. Something that has multiple reference points of support below. They're not the greatest. It doesn't mean they can't go down, but they're certainly not the best that there is. Now, you see the spiders, they just got up into that resistance yesterday and backed off a bit. Not what we wanted to see, but it held up okay, and now it's pushing up above. So I'd expect that to attack its 50 MA. And looking at that, see where I put my line right there. Notice we've got those opens and closes clustered right in that area. So the 50 MA is a target area. You've got an unfilled gap, and these opens and closes are all in the same area there. So I expect that's going to be some pretty significant resistance. So that'll be a focal point. And right now, you can see that it's a 24-hour chart. They're just hanging up there on the hourly, and we've got a nice wider range bar clearing that resistance there. So it looks like it can continue to go up. And let's just go to a longer time frame just so I can put the data together. And sometimes when you go to the intradays, you get a different reference point, because from the daily, you're expanding the information. That being said, there's that head and shoulders bottom that we were talking about. And if we get a little bit of a esoteric type analysis and do a measured move based on that, sometimes it works, sometimes it's baloney, and usually it'll line up with some resistance area. Let's see here. So the theoretically, measured moves as far as a head and shoulders bottom is you take the measure from the head to the neckline and you project it up, and then you see that being your target area. And actually, you do have some up here, but if it can get that close, I would be surprised to see that it doesn't keep going, but that's pretty far away. We'll see what happens here. Right now, we've got a decent looking bottom in place, and we'll just see like how far that can get going. The Qs, similar. They're up here again, 162.97 for the 50 MA. We see where that is. We see this trading that had happened in that area. And just keep in mind, even though things are bullish here, we're not like totally out of the woods of thinking we're going to new all-time highs. These moving averages are pointing down. There's resistance up above. It'll be choppy. And, whether it was a couple of weeks ago in our advisory report to subscribers, I did mention, even though we were looking for this bottoming area down here, that if it did begin to move up, and as it is now, that the fact that this formed this double top up here, this isn't going to just take off like a, momentum type of trend in an uptrend. This is bottoming out here. Buyers are stepping up, and it's got work to do to get above there. So let's see where the futures are at. And let's start with bonds, which look like they're potentially rolling over. They're just hanging here for now. They bottomed out, retest. So, type of a pattern I would say just stand away from. I would see if it breaks to the downside or up, and that'll have implications for the market. Oil broke out above this resistance area. And so now I'm just scrunching this up, and we could go to a weekly chart, and let's do that, because wherever that resistance is, it's relatively far away. And it's pretty much got open void up above. So this will be interesting to see what oil is going to do here. Now that it has formed this wide range bar on the weekly and cleared resistance, obviously that's bullish, and it's certainly bullish for our oil stocks that broke out this week and cleared this base over here, and that suggests higher. Now, this might pull back a little bit. It stalled yesterday with this doji type of a candle, but based on the fact that this went sideways for a couple of months and pushed above the highs, oil breaking out above resistance, these stocks should continue to go up over the next few weeks. Always the caution of keep in mind the possibility if prices, this breakout actually failed and came down hard. So I don't know that it will, I'm not saying it will, but you just keep that in mind, because if it does, the bias changes. It's as simple as that. What time is it here? Got a couple of minutes for the open. So we'll take a look at NASDAQ futures, where they're at. And getting closer to that 50. And so that is my initial target area today. Now, that being said, This is not filling in for whatever reason. That being said, we'll follow the trend on the 5 and the 60-minute time frame. There we go. So the 60 is in a nice upward trend. There was that pullback right there overnight and the push up. And was the little breakout bar failure. Right? I mentioned breakout bar failures and breakdown bar failures. So there's your breakout bar failure, and buyers stepped up again based on that little minor pullbacks. But we'll see how far this goes, but we'll follow the trends on the 5 and the 60 and see how far prices pull back and what happens when they get to our reference points. The Dow futures up 162 and actually at the 50 MA already. And so here's an example of relative strength, relative weakness. Sideways on the 5-minute, Qs pulled back and buyers stepped up. So there's a little example of relative strength and relative weakness there. So, all right, S&Ps clearing the highs here as we get toward the open. And now I just have to switch platforms here so I can open up this one on my desktop. So give me a second here.
Yeah. Hey, Patrick. Yeah, that DHI, if you're talking about, the gap up or pre-market, yeah, it looked good. I had a print that showed that it was down $2, but unless you see a lot of actual volume trading, then many times they're just, bad late prints. And where a late print comes from is if it didn't get recorded yesterday or even a week ago for some reason, they're required by law for it to hit the tape. And so they just print it. They just put it on the tape, even though it happened in the past. But can you hear me, Patrick?
You should. I hear you.
Okay, cool. All right. Yeah. I'm just always making sure.
All right, so you should see these other charts up there. Dan, make sure if it's not, I'm not sure, that on the bottom there, when you do type in that it's okay. I do see it's to attendees as well.
Yeah,
it defaults to just panelists.
Yeah, but it seems that they read them anyway, because before you reminded me of that the other day, I was typing for hours and they were interacting when it just went to panelists. But oh well. Here, look at this DHI. Yeah, it pulled back deeply, but and we're in it. But I'm looking maybe as a new trade for next week.
That one held up better than the others. So. Right. It's one of the things, I don't know if you and I were talking or someone had asked about it, the Lennar trade, which that was obviously not what we expected. But just as a lesson, look, not every trade is going to work out, of course. But if we can share with you a gold nugget, so to speak, of knowledge, meaning here's this Lennar as it was going down. And of course, we're looking at this in the point of view as, is this thing going to turn as it's pulling in? It's coming in toward the 50. It's coming in toward the halfway mark. It's coming in toward the minor support and so on. Well, when I saw the way it was coming down, and just look at this, I'm saying to myself, this could turn around, like as it begins to stabilize right there. So you can see the lines on my chart where it was stabilizing was at that minor support. You can see the same lines on the daily chart as it's crossing through to the left to right as it began to stabilize there. And then it didn't hold. And even on the gap down, it came up to resistance and it couldn't get through it. So as this was going down as it was, I was like, is it going to hold at those moving averages or wherever it's going to hold for whatever reason? It can create support. I thought to myself, this is just going down in a way that historically it needs to get climactic before it'll stop, because the selling just hasn't gotten to a panic level yet. And it did yesterday. And that's, what you want to see. If you're thinking, hey, the end of a move, or if you're thinking about trading something as a counter trend trade, and it's trending like this in a very tight arrangement. And look at those moving averages, how they're close together. And then it begins to accelerate to the downside. That's the sign that it's about over. And then you can look for scalping longs or just kind of wait it out for it to build a base. And, you look at the hourly chart to see as it begin to bottom out, so on and so forth. And then you go long on, that type of scenario. But once it becomes climactic, the last holdouts, theoretically are thrown in the towel, and that's where the reversal begins. I may consider some of these energy stocks as intraday shorts, just because they're a little short-term extended. Maybe some profit taking in them.
Okay, so Greg, since you said that, let's take a look at XLE to see if it's time to sell an out-of-the-money call for next Friday expiration.
Not yet.
Okay.
Actually, I was looking at FTI as a gap fill reversal. But XLE looks still, it's above this consolidation. But this one, you can see on the 5-minute, it gapped down and it's come up into the end of day base. So it's completely different. You can see it's extended on the daily. So it would be a scalp type of situation. But I had that up on my chart. But my others, S&P's gapped up and some profit taking on the gap up. Makes sense. Now we see, what is it going to do, here in the next 30 minutes. But let's take a look at gaps. These energy stocks are getting sold. Wells Fargo actually gapped down. PNC gapped down. Citi gapped up. And look at how it hit the 50 right there and back right off. Let's take a look at the gappers. So gap downs a certain percentage. I want to know if these gap downs are where they're trading now in relation to the open and yesterday's close. Did it gap down below a green bar? Did it gap down below the low of the prior bar? This one, PNC, you can see 3 checks. That's an uglier one. And they are sorted by percentage of the gap. What's Bitcoin doing? It's over 8,000. This, I don't know why this is related to Bitcoin, but some time ago, that's what I heard. And when it started going up.
Yeah, they just talk about having the getting into the crypto technology is all, and that's what everybody was joining the bandwagon.
This is a big gap. I like the 5-minute as a continuation, but it's a pretty big gap. Well, almost 3.5%, but big gap, but it is already up 3 days in a row and then gapped up. Tesla gapped up, but within a range. It didn't clear resistance. So with these gaps, we are looking for ones that can clear a resistance area on the daily chart, on the gap ups, and vice versa for the ones that gap down. I kind of like this one. I don't like biotech stocks. This one cleared this area, but it's right into the prior highs here. I mean, for the gap plays that have the highest probability, they have, and we're probably not going to find too much, but they have the highest probability when there's nothing to the left, and it just clears it. Google taking out the 5-minute high.
Yeah, I was just looking
above it.
Yeah.
This got an upgrade today. You see upgrades. You always, like everything, you have to look at the chart. Upgrading the gaps right up into the prior resistance and the 200 MA. Spider's trying to make a turn here. I'm just setting an alert at that line. If the spiders can get through the high of the day here, I would like, ideally going up there, and I would be looking to sell there. I've been holding them for a couple of days, as well as Apple.
Apple looks nice.
Yeah.
Yeah, we did another one of those yesterday for next week.
Looks great. Yep. And, it's institutions love it, and they're going to continue to buy this on dips until something goes very wrong. Who knows when that's going to be, or if ever. Hill Philly girl is here, Dan.
Hey, good morning, Hill.
This is Many things gapping similar to this, but I'm not very fond of things gapping up into the declining 50 period moving average, relatively close to some congestion. And even so, when we look at these and say, hey, you know what, this just looks like a great pattern overall as far as putting in a low. So even though it's at resistance, does it make sense to sell a put credit spread on it? And and it would if you could get something far enough away. But most of the time, when you're looking to get that far away, there just isn't enough what we call juice, which is the premium there, to do it. So we can find lots of patterns that we look at and say, wow, this is like free money, but the money isn't there. It's like you go over to the pot of gold and it's empty, or there's a couple of, chips in there. I'm going to go to my intraday trending scans. Okay.
Our VIX VXX entry was perfect. And the ad.
This is your VRX stand that I didn't want any part of.
Yeah, thanks a lot.
Nobody stopped you from hitting the button. So a lot of things, even the junk, had decent moves. Look at Fitbit off of the low here, but up into resistance. I need 3 eyes here. I'm taking this to put it over to the side. That's not what I wanted to do. How do I do this now? I want to drag it out of the float out. Okay. I can keep an eye on this away from what's being shown in the screen as I'm going through those stocks. So I can look over to the left to my other monitors, but it's easier to just look straight ahead. Of course. But it's connected. It's unconnected. Okay. So spiders are still holding here at this minor support point. Buyers are trying, but so far unable to get it going. Qs are holding up better. Leave that over there. So these scans that I'm looking at here, right, I've got 5-minute uptrends, 30-minute uptrends. But because, the market strength over the last day and a half or what have you, a lot of these things are extended. So makes it tough. And what's gapping up here is still in an uptrend or near some support like this MU. So it doesn't set up, like even if something is somewhat climactic to the upside, it's not set up yet to consider shorting. for intraday scalps, because like this NVIDIA, like this is gapped up, consolidated, big day, gapped up. You figure profit taking, but it's too close to any support yet. So what we look for is maybe if this was a bigger gap up, something huge, and then it's so far away from intraday support, and then begins to form a double top or begins to roll over, breaks the trend on the 5-minute, those type of scenarios. Q's reversing back down a little bit here. It's just sloppy, choppy action right now. But these oil stocks, look at the daily chart of this COP, right? How it's now extended from the 20. The momentum is stalling. There's no doubt. It's still early in the day, but the hourly chart, and this had multiple time frames, so you have to understand this. The hourly chart, even though this is extended on the daily and momentum is stalling, the hourly chart is sideways for several hours. And it gapped up today. So unless this was to break down below here, my idea of extended energy stocks looking for intraday shorting opportunities isn't set up. So, I look at, knowing where energy stocks are and thinking there'll be some profit taking. That isn't happening right now. So, that idea goes out the window. But, where they are, it doesn't, make me think I should go long intraday, because the fact that they're up multiple days in a row. Oh, look, Dan, VRX again. The Halliburton still looks good. Do I expect Cat to fade today? Hopefully, girl. Not necessarily fade. It's just that, as far as a long bias, because you said continuation gap up, I'm not, really favorable to it for a long. Look at the daily chart. It's in a downtrend. This looks like it's potentially bottomed. And you can say, well, why? Because it broke down. And is that the second? It's actually the 4th of April. I think it was the 2nd that the market had the breakdown failure. So yeah, right around here. And so it's moved up into resistance now. So as when we talk about continuation gaps, you want a picture of something more like this, meaning you can see this base here. Right? Now, just imagine if this was a daily chart and you had this consolidation and it moved up and went sideways and gapped. And there was nothing to the left, meaning this resistance wasn't here. That I would take as a continuation gap with that daily chart, and then look for intraday timeframes to play long. But the picture on the left, right, is a bottoming pattern that has moved up nicely, but into resistance. Now, how much resistance is there if I'm thinking about it, as an intraday trader and assuming the market was to hold up here? So we can come up with different scenarios and biases, and the more pieces of the puzzle, concepts that we can put together, the higher probabilities there are in all time frames. But if you said, Greg, all right, this gapped up here, I see it's at the 50, it's bottoming here, do you think it could go higher? And just even for at some point for 15 minutes, I'd say, okay, let's drill down a little bit here. And then looking to the left, I see, that there really is a bit of a void to resistance, because this came down with such momentum to the downside that there's nothing to the left there. So now I see, okay, it has that possibility. Is there a play? Well, at this point, it looks like into the gap fill, but then I always looking, what's the market doing? And the market is basically, it's coming in here. And what time is it? 9:53. Maybe this is, where I talked about if the market continued higher, watch for a possible reversal at the first reversal period being 10 o'clock. So maybe that actually inverts from what I said on the gap up, meaning thinking a gap that continues higher versus now this gap was sold into. We have to watch at 10 o'clock and thereabouts. Does the market actually make a bullish turn to the upside at the first reversal period? So as it's coming into support, that idea is supported based on the chart at this time. So we just need to see if it can form a reversal here. Dan, maybe next week it's kind of hanging out here, but Walmart has just been a real dog, just going sideways when it was on top of the 200, wow. And now it's just hanging below the 200, and wow. Maybe the market is what's holding this thing from cratering.
I agree.
Costco is weak today.
Our Boeing is getting sold, well, and Wynn are both getting sold into a little bit. We just got to watch the retracement.
Yeah. Well, the hourly is just slop.
Yep, I wonder if we're going to fill the entire gap now.
Yeah. The financials gave it all up, so that's not good. I mean, the daily charts in them look fine, but here. Home Depot continues to base out here. It's okay. Nothing to get excited about, but it continues to chop around here above the 200 MA. That's the red line on the left side chart. Twitter, maybe a short coming soon. And everything is kind of like in kind of limbo here, so to speak, as to the direction we've had. You know, this gap up, and there's just some profit taking going on from yesterday, which, you know, that just communicates that while confidence has increased from what it was, you know, nobody's feeling that huge urge that they have to get in, where they're back to feeling that they only want to get in on the pullback. So let's see what happens here as we come into 10 o'clock.
So, I mean, Google still looks fine, but, you know, we sold it yesterday for 65 cents. And because of the melting ice cube, it's now 10 cents because it expires today. So do you want to cover half, all, or none, let it expire worthless, but, you know, you got to pick a stop and hope it doesn't go that far. So there's no perfect answer, but that's why I just gave a compromise. Let's cover half.
What's the upper strike, Dan?
10:15, so it's far away.
I mean, do you think that there's any possibility?
Of course. It's a silly question. Of course. We've had some nasty sell-off days. But no, I hear what you're saying. But you know me, when you say, I don't care what you're asking. If about the financial markets, if you say, is there a chance? I'm going to say yes. Unless you say, is Facebook going to zero? That won't happen because they have liquidation value.
I would say there's a 99.9% probability that Google does not go to 1,015 today. And I will.
You know what? Let me look at the delta, and I'm going to tell you what the option market believes. And I wouldn't say 99.9 ever, but I would say 98.
Okay, let's split the baby.
Okay, so 10:15, it has a delta of 3. So what that means is there's a 3%, and this is how you read delta. Here, let me type it. 0.03 delta for so a delta of 3 is saying that based on these option prices and the volatility, that there's only a 3% chance that it does go under 1015 by today's expiration. So then the flip of that is you take 1 minus 0.03, and so there's a 97% chance that it expires out of the money. So Greg said 99.9, I said 98, and the option market is saying 97.
But the options market doesn't look at charts.
Correct. Absolutely. Absolutely. It doesn't.
Right.
Absolutely.
That's why my numbers are more correct.
Well, and mine was just not as bullish as yours because 98 is pretty still darn high. 98% is almost 3 standard deviations, which is that's a very big move in one day, 3 standard deviations. Yeah, I covered some of my spider puts there at the high, but still holding a boatload. So even with this pullback here, just because of the time decay, I'm up $1,100 just in time decay in my spider positions. This Elfin that we're in is still halted.
That's crazy.
Well, I mean, it is what it is. And then, like I was talking about the other day, if you were long a put, would you exercise it? Yes or no? And being long a put gives you the right to sell stock at that strike price. So, Greg, would you short Elfin right now at $5? Yes or no?
If I had inside information, I might.
No. Of course, that's cheating. But no, just right now, would you?
Well,
it got halted at 27. Would you short it at 5?
Elfin. Well, if you're saying just based on a chart.
No, based on reality, it's halted.
Well, my reality lives on a chart. So I don't know. I would have to look at the chart to make a decision.
Well, then do it.
That's what I'm doing right now. So no, the prior low is about $5.
Correct. And that's why those are the puts we sold. So would you short it today at $5 if you could? Meaning, if you were long a put, would you give the broker an exercise notice? Yes or no? That's a discussion I was having with the traders the other day. And my answer was, no, I wouldn't, because if I was long the stock, I'm agreeing to give it up at $5. So I've just locked in a $21 loss. But, depending, of course, wherever it opens will be you'll really know if it was the right decision. Or if I'm not long the stock, well, now I'm short it. And what if it opens up at $20 or 15? You're short at 5. So anyway, my discussion was, because somebody was asking me, hey, Dan, can we get assigned our short put exercise notice while it's halted? And I said, yeah. But I said, would somebody give an exercise notice without inside information? I'm like, they're stuck too. They don't know what to do. So what I'm keeping my fingers crossed, because I'm in it too, is that it stays halted. Well, two scenarios. It opens up and, it can get beat up a little bit, but, as long as it doesn't have a catastrophic gap down, we're fine. Or number 2 is that it stays halted through expiration, and then our puts expire worthless because the long put holder didn't have enough information to give an exercise notice. And it's, we sweated that one out. So that was my discussion. Yeah, Zillow, I read in the Wall Street Journal today. I don't know if this is the sole reason why it's gapping down, but it just said that they were getting into the house flipping business. That's kind of interesting.
That's risky for, I think there's some kind of, not a brokerage firm or.
No, it's the online house information thing, Zillow pricing, and, it's a user friendly for house hunters and renters. And maybe Wynn had strength yesterday, because I also a little snippet here in the journal. Wynn has been in talks to sell its partially built Boston area casino to MGM. And then GE is in the news again. They're talking about spinning off some stuff.
That's probably a good thing.
Yeah, because they would only spin it off. Well, they could spin it off because they're in desperate need for cash, or they could spin it off, to make money and to shore up their business. Yeah, I'm not liking the sell-off now. I wonder if we should take more profits on some of these spider puts, because
I wouldn't do it right now. They're coming right down.
Yeah, let's see what happens.
Yesterday's close.
Right. Well, IWM sliced through it.
Yeah. So did the Qs. Been no tick extremes yet as far as selling goes, but the ticks have been grinding lower since the open, because it opened up at about over at plus 1,000. I don't know exactly what it was. Doesn't matter.
Yeah, I meant to ask you that. Yesterday you were talking about your tick indicator being the only one you kind of watch intraday. And in the old days, we also looked at the trend for sure. And, maybe some type of McClellan or whatever, but why don't you in the put call ratio intraday? So why don't you look at trend and put call? Well, I know you look at put call intraday because you.
No, I don't. I mean, if you ask me, sometimes when I see a significant sell-off or buying, I look to see what it is, but not on an intraday chart. I just look at where the closing price is. Like, is there an extreme amount of put buying or call buying at that moment in time? Not really necessarily like the trend of it or where it's been, just as it at an extreme. But but the trend and the others, I just eventually, because I was more now just trading stocks versus the futures, and a more diverse focus, looking at not only the broader markets but various sectors and stocks within them. I cut back some of the information, which I felt was, not as necessary, since I wasn't focused on trading, the equity futures, just the tick telling me, overall the mood of the market overall. And when it reaches, a panic or, total, in love with things, so to speak, and when it reaches those high extremes and low extremes, that's what I want to know. So that's all I look at.
Yeah, I mean, I don't look at the trend either, because I don't day trade like I used to, but that's why I asked the question, because I still thought it used to be valuable. Is it above or below 1, trending on its 20 MA? Like, today, I guarantee it's above 1 and above its 20 MA right now. I guarantee it. If it's calculated the same way, it has to be.
Well, one of the things that is said is that it's somewhat skewed, and it is somewhat skewed based on the inverse ETFs. So you can see it right there on the right side chart. It's at 0.93.
Ah, I was wrong. I said over 1. So that's a good point on all these inverse things. And I wish the creator would, fix that.
Well, I think he's dead.
Okay, well, the creator's successor. McClellan.
It's just McClellan. That's a breath.
No. I was going to say he's I thought he's the gizmo guy.
Yeah, but I mean, anyone can apply a different formula to advancing and declining stocks. Well, actually, This is the ratio, but you can write the formula. It's advancing divided by decliners. And then
but you need to pull out the ones that are inverse, or code them where they're long and short the opposite way.
And some people do that. Some people, I'm sure I could do it in eSignal, and I'm sure people could do it in TradeStation to create their own group of stocks and apply a trend formula to it.
Sure.
And we're starting to get a bottoming tail bar on the Qs. Let's see what is holding up well here today. That's weird. See, I'm sure you see it, but this blue minder here is looking for stocks with a large range, and there's nothing in there, which is, it's interesting because there's always something in there.
Absolutely. Well,
so is it broke, or is there is there just most things are not moving very much?
No, I think it's broke.
Don't say that, Dan. I don't like my things to be broke.
Well, it is what it is, right?
Oh boy,
there's plenty of ranges here. It's much bigger than yesterday's range.
Well, I'm not really sure. I'd have to go back and look at. I'm not sure exactly. Range surge, and it's certain stocks within a certain level of volume, but I mean, my wide range bar scans, and that's kind of like relative to that particular scan. Gold moving up there. The Coca-Cola, Dan. I mean, I'm not crazy for it, but a put spread that was far enough away. And those oil stocks continue. Too low volume. Well, the Qs, I said, you can see right there, And look, the retracement was pretty deep, hopefully, girl. So when prices pull back this far and break under the prior day's close and this far away from the open, most of the time they don't get back above the open in this type of scenario. Now, it could certainly bounce here. And if you were scalping, on that bottoming tail bar, it would be worth the shot to do it. But, based on, look at that. When it's this far into the open, it would be unusual for it to be able to regain its footing completely and get back up because, while it was a grinder, it kind of ground its way up. And today was the fourth day up on the gap. What should have happened, what I was explaining pre-market, from the bullish side, what should have happened was sideways and push up into the 50 and then roll over. And, at that point, probably dead for the rest of the day, doing nothing, chopping, consolidating, coming in. Some of I talked about it twice yesterday was the idea or concept of putting a setup within the big picture. So a bottoming tail bar like this, right, does obviously suggest a turn. However, when you take that bottoming tail bar and put it in the context of, a gap up above a base and breaking down under the base and a daily that looks like this, it really doesn't support being aggressive on the long side just because of a bottoming tail bar. Now, what could change that? Going sideways here for a while. And let me just back up for a minute. This pullback, how do you feel or think about this pullback here? Are you more or less confident about the market's ability to move higher from here?
I won't answer.
They're hearing a few seconds behind you, on YouTube.
Okay.
No, I'm not sure they're going to answer. Sometimes people are a little hesitant to say what's on their mind, like as if you're being, into a trick question. But I think all of us would say I'm less confident because of the fact that the depth of the pullback, and anytime prices gap up from a consolidation, chop around for a little while, and then, go down under the support, we're going to be less confident in the bullish scenario. Now, that doesn't totally negate it from a higher time frame, but when I think about an intraday trade, this is not what I want on the long side. So this creates uncertainty about the bullish scenario in the short term. What can change that is time, meaning if this was to go sideways over the next 20, 30 minutes or so, retest this area and build a bit of a base, my uncertainty would begin to dissipate over time. And that changing, developing pattern, I would then, yes, consider it for a move up. Right? So hopefully that makes sense. I touched on this a little bit, I think, yesterday about, this, what I've seen a lot of in this educational industry, and where it's kind of gone with chat rooms and education, in my opinion, and it's not completely, but to some extent, I view this as the sheep being led to the slaughter, because they are being led into trading patterns exactly like this, meaning they're trading some type of reversal here, maybe even off of a 1 minute chart. And whether the person pressing the button is really trading or not, who the hell knows? But, buying thousands of shares and flipping it out for a nickel or 8 cents or whatever it might be, and making whatever. And these moves tend to happen so fast that most people are just going to get chopped up and destroyed. And a lot of these computer trading algorithms, they see that bottoming tail bar and know that those cues are down 6 bars in a row or whatever it might be near support, and they are already set up. You're measuring some momentum that is going to trade this thing for 2, 3, 5 pennies or whatever, and you're not going to compete with that. I would not be surprised to see these cues make an attempt to actually a better attempt to reverse after breaking the low of the day. This doesn't work so well on this platform. As I can see. That's nowhere near where it really is. Let us see here. Well,
Greg, the journal also reported that BlackRock pulled in 57 billion in new investor cash last quarter. The bulk of it going to ETFs.
people are getting smart. What's the symbol on that? I thought it was BK.
BLK. BK is a bank of something or other, New York.
Yeah.
Well, it looks like trade war fears are, back in everyone's mind, and maybe not holding over the weekend with Syria risk. Did you hear the president go off on Comey today?
No.
Oh my God, they don't like each other. Yeah, just you can Google Trump's tweet, and it was, it was pretty harsh.
Well, he doesn't hold back.
No kidding. He's absolutely right.
That's what kind of is they make him interesting and even to some extent dislikable. I mean, there are people obviously that hate him for whatever reason, but one of the things that I've seen not just him, other people in the past, it's like, you have a difference of opinion about something, and rather than debate it on its merits, he'll start calling, picking on people's, personality or their weight, like what he did with this Rosie O'Donnell years ago. He goes like, let me see how I'm going to twist their feelings about something versus talking about whatever the issue is. What makes him entertaining? All right, here comes the attempt to turn the boat. Being Friday, Dan, but I can go through this list here, and I assure you, I'm going to find things for spreads.
Well, I mean, do it. And only if it's juicy.
Yep. Walmart is going on my short bait list. All right. Well, let's take a look here. And, pretty much anything, even like this, I just happened to bring this up here because it's at the top of the minder. Gap stores, no bounce whatsoever, and just hanging on the edge of the cliff here.
Yep. But yeah, I mean, totally. And first target 200 MA. And Greg Haven is asking you a question.
How do you think of level 2 data? I see some people just see the time and sales window, then they know the stock will go up or down. It's like some kind of magic for me. Well, level 2, just looking at the and time and sales, it's like looking at a tick chart, if you will, or a 30-second chart, or not even a 30-second chart, or a 5-second chart, and looking and calculating in your mind the interaction. Right, it's tape reading, the interaction between buyers and sellers. Now, this is something that was used a lot, back in the mid 90s, the SOS Bandit days and, that type of trading. But today with, algorithms and computer trading, yeah, I can look at a level 2 and I can tell you that there's a lot of buying or selling at a moment. And look, as things get closer to my reference point, I look at that type of information. And in my time in sales, or if something is about to turn, it's useful information. But I would caution everyone about trying to trade off of level 2 and being a scalper, because, I've said this in the past a lot, but your best friend will be your broker, because you're going to be generating so many commissions. It's ridiculous. And, unless there's a momentum move, and you probably won't take advantage of that momentum move, because in any moment in time, the level 2 and the tape will tell you that it's going to crater. And meanwhile, it's nothing really going on, because you're just getting too close to the action. So at a turning point, your entry and your exits, level 2 can be of a benefit. And what I was going to say, on my time in sales, I have them colored so that I can just see the normal, trades are going off at the bid or trades are going on at the offer, big deal, back and forth, or sometimes in between. But one of the things that I find helpful at those turning points is I have different colors when trades are going off above the offer or below the offer. So if I'm thinking long and things are at a turning point, and all of a sudden I see like a spray of color, and sometimes I don't even know the prices because they're going by so fast. I see a spray of color that tells me prices are going off or trades are going off above the offer. That's useful information. And so combined with the chart, I say, that makes sense to me. And here is someone actually, it's actually called spraying the offer, meaning they're sending an order for shares at the inside bid or the inside offer and above the offer to get filled on the size that they want. So that action on the tape makes sense. That's aligned with the chart. Now, as the move starts, and from the chart would suggest to me that it has the potential to go, let's just say $1.50 higher. And now it's up 10 cents. And all of a sudden there are sprays being hit below the offer. Ignore that, because that is just, somebody taking short-term profits. And from my method or bias plan, that isn't meaningful. So I ignore it. But someone that doesn't know how to combine that kind of moment-to-moment tape reading with multiple time frame analysis on the chart, there, it's like someone that's trading and constantly, feeling like, there's somebody going to swing a hatchet and take their head off because they're always scared to death about every little ticking that's going across that ticker. So you get a lot of moment to moment information that from even let's just say an intermediate term swing trader's perspective works against you. So Dan, Hillbilly Girl is saying 3M has been range bound and has earnings on 424, which I can see they do in my chart, about a bull call spread.
Okay, so bull call spread means you want a directional. And so question number one is that your intent? You want to put on a bullish earnings trade? Number two, to me, this isn't compelling. Well, I'd rather a short put spread than a directional. That's just my opinion. Number three, when you're buying options into earnings, then volatility is high. So our general teaching on directionals is get roughly an 80 delta on the long one. So then your two things happen. You're minimizing extrinsic value, which is time value, and you're also getting a big bang for your buck on your directional bet. But we also then recommend selling an out of the money call because that's going to be 100% time premium. It'll lower your cost basis, and you're selling that high volatility. So you're paying a little high volatility, but you're receiving.
Dan, I made a mistake. She meant bear call spread.
Oh, I mean, it's kind of extended and trying to make a bottom with a few false bottoms. So I personally don't see this as a bear call spread candidate, particularly into earnings. I like I like Walmart better and your GPS better.
Mm-hmm. I mean,
the bottoming tail on the monthly right at the breakout area also.
Yeah, I mean, it didn't go up. It did not rally at all with the market, and it's below all the MAs.
So where would your entry be?
Well, I wouldn't sell a bull court, if I can get the words out, cold spread.
No,
but honestly, I wouldn't do anything with this because of the earnings.
Right. Well, correct. I'm right. So I was just covering both things, earnings and pattern.
But I would rather, unless this thing could break above those highs at 220, I would view it from the bearish side, looking for it to go lower.
But just compare that to Walmart. I think it's superior.
You're right.
So
we're just discussing that. Walmart is on the edge of the abyss here. For I mean, the weekly, that's a pretty deep pullback. But you would think, All right, based on that pullback. And I did think it because I said to you probably a couple of times, Dan, what about a put spread on this? And well, there was no juice or whatever. We never did it. And I'm happy we didn't now, of course. But, this was a deep pullback, a bottoming tail bar. It was holding, and now it hasn't been able to. And this just, just looks like it's got to go down here.
Correct. Yeah, we wanted a bull put spread and it didn't trigger. It was invalid on one of those, whatever. Yeah. I mean, is this one you want to do over the weekend?
If we could sell it above this base, sure.
Yeah, absolutely.
I mean, the earnings are far away. We could look at whatever's in the sector that could affect it. Let's take a look at that.
Actually, no. Well, I mean, for next week, no. The 90s are only 5 cents. That's crazy. So therefore, and this is for our viewers, listening and education, Greg and I always start out, just keep it simple. Is it a directional pattern or an income pattern? If it's directional, we can either trade the stock or an option or both. So if we like it as an income trade, then it has to meet our criteria of having sufficient, juice, which is the premium for the risk received, I assumed rather. In this one, I just immediately vetoed. So now we're back to the directional. So we could do, because there's not much juice, sure, you can short the stock, but this is another benefit of buying options that we can put on a bearish directional using options with significantly less risk and capital requirement. So I would buy an in the money put. Well, number one, I would say, how long do I think I'm going to be in this trade? And that will dictate what expiration I use. And this one, I mean, I could go deep in the money for next Friday and just say, hey, it'll be a 1 to 5 day swing trade, and that'd be fine. So let me show you how I go deep in the money, not to pay any intrinsic value. The stock's trading at 85.5. So that's the at the money. So in the money is higher prices. And what I do, just as a quick visual aid, is I look at the out of the money calls. And then, so like the 90s, for example, are only 5 cents by 6 cents. So they should be pretty close unless, you have the, so I would buy the $90 put, and it's 450 by 460. And so I would be shorting this at only $4.60 a share. If you shorted the stock with 2 to 1 margin, 1,000 lot would cost you, what's half of 85? $42,500 of capital. This would only cost me, midpoint is 4.55, so it would cost me $4,550 plus commissions.
Which expiration was this, Dan?
Next week, Friday.
On the 20th?
Yeah. But so when people say you're a moron for trading, for buying short-term options because we like to sell them, I'm giving you the exception to that rule. So you're not a moron.
Yeah, excuse me. I brought up on the screen so everybody could see the option table. So which strikes were you talking?
The $90 put for next week. So you're not a moron if you're getting it for virtually free. And so by only paying $4.55 or $4.50 for this, that's 5 cents of time value. So it's worth to me giving up a nickel to have the benefits of options. So let's say Amazon decides to buy Walmart. I know not high likelihood, but just for the hypothetical. and it gaps up to back to its prior high of 110. If you were short the stock, you're now $25,000 in the hole. If you buy options, that's your maximum loss by definition, whatever you paid for it. So my maximum loss would be the $4,500, not $25,000. And so those are the two benefits. As I said, you're controlling stock with leverage at significantly less capital. So then your return on capital, dwarfs it. All right, the market finally getting a bid here. So yeah, we'll just watch Walmart into the close. But then when we do longer term, like more core-like trades, then I go further out, like we have on the not the XLE yet. What did I post? No, we have it on the Spiders, actually, in the advisory letter. We're long a May call, and we're short next week's out of the money call. So that's similar to a bull call debit spread, but it's just called a bull diagonal credit debit spread because the diagonal refers to two different expiration cycles. So, I know some of this terminology is you just got to, learn it. And once you understand why it's named that, it's pretty easy to memorize. And it just makes communication easier. It's like a doctor or, the pilot talking in the right lingo. So it just speeds communication. Let's see. So you would be buying the 90 puts and no, I wouldn't be selling calls. I would be buying so yeah, let me finish, John. So if I were to buy the 90 puts, so then I'm paying 5 cents a time value, right? But how I sell an out of the money put to give us positive time decay. And let me explain what that means. So I have to pick what strike price I'm willing to cap my gains at in exchange for those gains. So I'm just looking at the 83 and a halves. They're only 30 cents, but if this stock fell $2 from here, then that's a nice $2,000 swing trade profit for a swing trade. But secondly, if I'm paying 5 cents time decay value for the 90 put, and then I'm selling an out of the money one for 30 cents, the difference is 25 cents. So that is my time decay cushion. So I'm increasing the probability of profit by 25 cents. Oh, versus you just shorting the stock. I'm ahead of you, on day one because of that little cushion.
Would you repeat that, Dan?
The whole thing or the last part?
No, I thought it was very interesting what you were saying. Like you were saying, again, what I gathered from that was that you could use an option to make more money than just shorting the stock. And it would be an out of the money put.
Yeah, but so the only downside is similar to a covered call is you're capping your gains. So that's what if I'm selling the 83 and a half put for 30, so 83 and a half is only $2 lower. Now, if you say to yourself, no, this thing's going to tank $5. Why do I want to cap my gains? Well, then that's a decision you have to make before you put it on. And I would say, fine, don't sell it then. Just buy the 90 put, period. And then wait for it to fall. And then that's how we leg into spreads, just like we had the conversation on XLE yesterday and this morning. We said, is it time to sell an XLE out of the money call to lower our cost basis? Yeah, Tony, the quarter is we're selling an out of the money put on Walmart, 83.5 for 30 cents, right? But we're having to pay 5 cents of time value if we buy the $90 put. So we're paying 5 We're selling 30 cents of time premium. So the difference is 25 cents of time premium. So yeah, do you want to look at XLE?
Hill Philly girl said that went whoosh right over her head.
Well, that's exactly why you need to. Do you have the link handy, Greg, for the spread of the $97 course? Because I mean, we tell her, Hill Philly, we have a fantastic 10 module complete option strategy series course. You can check it out on the website. Every description of every module, which then you would be able to follow every word of what I'm saying and trading them for yourself. Or if you just want to start slower, we have a $97 awesome credit spread course, which specializes in what we do in our weekly options letter, which is selling out of the money credit spreads around bullish and bearish patterns.
That's the full course Dan was talking about. And anybody that is interested in that, just email me. I'll send you a coupon code for $500 off.
Yeah, thanks, David. That was nice. And it really is true. If you just take our courses, you'll never, ever hear us use the word proprietary, meaning there's so much junk out there that people are trying to sell you their magical formula. This is proprietary, this and that. Well, bullshit. It's not. We're showing you in black and white, objective data. It is what it is, both on stocks and options. It's just laid out there for you. And then it's just a matter of you finding the patterns, applying what we teach, and following the rules in your own trading plan and doing it over and over again, like we do in this room and we do in our letters and we do in our own accounts.
That's the credit spread course that I just dropped into YouTube.
Oh, thanks.
I just put that one into Zoom.
So yeah, so just to finish the conversation, Walmart, since this does look like the beginning of the fall, then we'll announce it into the close if we do it. I'm not doing it now with market, trying to bounce here and it's 11 o'clock, et cetera, doldrums. But if we did put on this position, I would just buy the in the money put. I would not do the spread because for 30 cents, I would rather leg into it and hopefully this thing cracks on Monday and, falls $1, $1.50 and then sell your out of the money put. But, the risk of not putting something on now is, it tanks over lunch and you just have to be okay with that, or that's what you leg into. You say, if I was going to do a 300 share position, you just maybe do one lot, sell, short 100 shares, or if you're an option trader, you would just buy one contract, not three. Yeah, Tony, I thank you for saying that because you're 100% correct. After a multi-bar move in something like our XLE to the upside, and if anything that has a multiple day drop, the implied volatility is going to go up. So two things happen. We can sell a further out of the money strike, and we're getting paid more premium than we are had we done it before the multiple bar move. And that's why one of our specialty patterns is, and you've seen it on the spiders. You've seen it. What month was that? February. You saw it in the February collapse, and then you also saw it over the last 3 weeks. We've been doing it. You wait for the spiders to get climactic oversold, reversal bar, and you sell out of the money puts. It's like so easy, and that's why we love sell-offs. And because if we get the setup, of course, we can trade them directionally short, but then we're sitting in the wings, waiting to sell overpriced puts. Yeah, market's nervous here. So yeah, I've been taking some profits on my spider puts here just to lighten the load into the weekend. Wow, everything on my screen is just making another leg down. Bios, banks. Well, FANG stocks are actually holding. Amazon's weaker of the day's range. So, Greg, let me ask you, in terms of this turning out to be a breakout bar failure in the spiders, what would you want to see? It to trade under Wednesday's low or even yesterday's low? What are you thinking? Which is now. But I'm thinking Wednesday's low. But the hourly, this is an ugly gap in, crap engulfing.
Exactly. So, I mean, it is, but the hourly trend hasn't really broken yet. It's really just slop, and clearly is creating uncertainty about it. That's for sure.
And yeah, John's asking a good question on Win here. And I'll say something and then you can add to it. So John, yes, retracement principles, we never want to see it retrace. It's generally more than 50% because that shows weakness in terms of possible negating of the wide range bar, similar to these home building stocks that, are causing us some grief. But in terms of a stop out, well, I mean, if I were long this stock, then on the hourly chart, I would have had my stop under that prior pivot. But we're short the bull put credit spread, and we're still within 50% of this. And as Greg just said with the spiders, same with this, it's still in an uptrend. On the hourly, we have rising 20, 50, and 200. So it's just not a logical place to take a stop now. But the answer to your question is, yeah, it's a deep retracement, and I ain't liking it. But in terms of risk management, Greg, what are your thoughts? Would you reduce exposure, or do you just gotta wait and keep our stop until we get more information?
I was doing some trade things. You talking the spider trades?
No, Win.
Oh, Win.
Yeah, I was talking to John. He's asking about the retracement and any risk management. Our put spread is under.
Do a different screen here.
So yeah, I don't know if you were paying attention. I just said, I went through retracement, but whether you're trading stock or options,
it's really like nothing. I look at that and it's like, okay, the market's weak, right? And this is obviously weak. But overall, this pattern, it's just a red bar in the context of a bottoming pattern. Could it turn into something worse? Yeah, of course. But that is part of, making decision as to what time frame are you going to manage this from? And what, when it comes to options, how long do you, what is your exposure? How long?
Friday.
And what's the upper strike?
One, let me pull up mine.
I have it.
Yeah, no, I have it here. 177.5.
Personally, I'm just sitting with it.
Right, and that's what we're doing. But yeah, John asked the question, so you know.
I mean, I hate the fact that it didn't hold the 5 minute, but if I was trading the 5 minute, I'd be getting out. But this is a completely different vehicle, tradable vehicle when we're talking option spreads and time value and all of that. You know, it's not long the underlying, so you approach it completely different.
Yeah, and I also watched the 240-minute chart, and it's, you know, you can see the 50% retracement into that nice breakout, and it's in an uptrend. So it's just, it would be a horrible place to stop out. So it's, yes, it's painful, but you know, we share sized it for the stop loss that we gave, and you know, we need more information.
What's killing the market is the financials. I mean, look at Citibank.
That's weird how they just, you know, gap and crapped all of them. I mean, that's weird to me, unless the Fed said something, you know, interest rate related again. Because yeah, I mean, you could have one stock, you know, do a turnaround because they might have, you know, their earnings conference going on, and you know, they say something that people don't like. But for all of them to be doing the same thing, I think that's something hitting the whole sector.
I mean, they all gapped up and went to hell.
Right.
This will be interesting what actually happens next week, in that the small chart on the left there is the weekly chart, which, well, it's sideways here. And we'll see if this actually follows through to the downside, or whether this is just continues to be a messy consolidation.
Here, Greg, pull up DHI, because I'm going to show them how and why we roll and what we did on this. All right, I was just typing this up. So now this is in our weekly trader. and let me post it, and then I can explain it. All right, so we put this one on the other day when it looks like Tuesday. Yeah, Tuesday when it traded over Monday's bar. We sold a $45 naked put, and so Tony, we were just talking about win into this wide range bar, similar concept. So we said we're not going to take a stop on this one. We will just roll it if necessary. And so I'm going to roll it right now. And so we're short the in the money $45 puts. Now, could I have waited to the close? Sure. But this is what I'm showing you we did. So in one order, we're buying back to close those $45 puts that expire today. And even though, it's in the money, 50 cents, because it's against us, there's very little time value left. And so we're selling the same $45 put for next Friday. And that's what's called rolling. So I'm buying one and I'm reopening that position simultaneously in one order. And I'm taking in, it's a credit, 47 cents a share credit. It's going into my brokerage account per share. So on a 10 lot, that's four. I initially sold them for 33 cents. That's $330. I'm now taking in 470 more dollars. So that's raising my total credit now to 80 cents a share. And so now I'm short the $45 puts for next Friday. It's an open position now because I just rolled them. So my break even at this point in time, my break even on this open position is $44.20. How do I get that? If I'm required to buy it at 45 and I already put 80 cents in my pocket, then the difference is $44.20. That's my break even. So even though this stock is 50 cents against us, well, it's more than 50 cents against us from the time we put the position on. But time decay went in our favor. Our new line in the sand for next Friday, $44.20. So I hope that helped for those of you who, are new to rolling. Like Florence sent me an email yesterday about rolling something. Now I'll update this in our spreadsheet, and then I think I'm going to the gym.
Little breakdown failure on win here on the 5 minute. So good sign for a little bounce.
Yeah, same with the Qs. 10 minutes kind of had a, two bottoming tails there, sloppy, but yeah, sign of a short-term bottom. So hopefully that'll be the low through lunch. Hopefully.
Probably. What I was said earlier as far as making a new low and then the reversal, which was here, which it did, but then it made another low, So now a little lesson here for all of you on this chart, how to read momentum. I talked about this a little bit yesterday, right? So those of you that maybe some of you that are watching on YouTube, maybe this will be helpful to you. Hopefully everyone is in the green room here with us. Have heard me speak enough about this that they believe it and not using their indicators, but here you go. So first wave down, or move down. Strong momentum. Expectation is it's going lower. Right? Now, it's in an area of support, and that's why it began to hold here. Right? Hill Philly girl, when you said, but I told you, and this is probably not going to do much because of whatever I said at the time. Anyway, on the next break lower, many times that is how the Qs, the spiders, the equity futures, that's how they trade. They break to a new low on the day and then they reverse. Sometimes it's a meaningful one. Sometimes it's not. This wasn't meaningful, but it attempted to go lower. Anyway, the next move down, the momentum slowed. Look at the move here. Look at the move and then the reversal. Look at the move, then the reversal. So the momentum slowed. Another new low, reversal. Look at the distance between the lows. So if you're looking at your indicator now, right, what you're seeing, right, is your, right, I don't have it lined up right, something like this, right, with some kind of bullish divergence showing momentum. This is how you need to look at it, just observing price and know what's going on. And if you're a scalper, you'd be buying here. Now, as this goes into the afternoon, and we think about, is this possibly, jitters about financials and so on, and can this begin to build up again? Well, here on our 5-minute, that's our major resistance. This goes sideways for a while. That could set up a void to move back up again. So we'll be looking to see if that shapes up after lunch. So for all of you that are addicted to indicators and think you need them and all those, squiggly lines, stick around. And over time, I will show you how to do and read anything on a chart without indicators, or explain to you what the indicator is attempting to do and why you don't need it. Okay. Well, Hillbilly girl, if you absorb what I'm saying and print out this chart and make a few notes about what I said, you're going to be making a big move forward about not being a momentum dunce. Because once you have the picture and you understand it, then you start to look for more examples of the same, put together a little portfolio of examples, print them out. You can copy them into Microsoft OneNote, but put together a collection of the concept. Actually, it did. It wasn't the strongest. Let's clear this out. There's this chart. I have to go to a different screen. Hold on. Okay. Let's move this away. For you guys in the YouTube, I was asked about market internals. So this platform, Tim, it's not set up exactly like the eSignal one that I usually show in the letter. Well, that I always show in the letter. I never show this one. But it's generally close. So the one that I show in the letter is something that, excuse me, that I developed years ago. And actually it can be reversed, but we did get a signal here, right there. And was this lined up? Yeah, right here. Well, this was in February where it turned green. But what I have on the E signal are bands that I created that adjust for bull and bear markets as to the levels. What is this here? March. Why does it look like that? That's kind of weird. That's why. That's why. I was looking at the wrong area. All right, here it was. So I wish you know what? I could bring up the other platform. Hold on. I can show you exactly what we look at in the letter. I have to close it over here and open it over here. Give a second. Just waiting for this E signal to open up. In a second here. You should see that. And okay. So yes, we got alignment here, right? On that drop. And here was, you know, a big reason, and that's what I wrote in the letter. When this was looking ugly and began to drop, and on that Monday update, I wrote, this looks like a possible turn. And I was like, well, if you look at it at that time, you'd say, you know, what the hell is he looking at? Because that's what I was showing at the time when I wrote, could this be the turning point? And it was because of the internals and the sentiment being as bullish as it was. So many were bearish. And now we were starting to see a breadth divergence, meaning there were fewer stocks that were moving down with momentum compared to, you know, this move where it got deeply oversold. So it did get down toward the minus 200 area, and sentiment was there. So when I wrote, potentially this could be a turning point and a breakdown bar failure. And then we got the inside day, and I followed up with that, an update. And this is when the market gapped lower. So we already had the signal, and now it was like, okay, we have that lined up. Is this market going to, you know, play along with all of the news jitters that were going on at the time? That was the kind of the fly in the ointment. And then, you know, okay, we're heading that way. And then the next day, trade war fears again, and it's going lower. And then, you know, there was the rally, and then the move back down at the end of the day. And then overnight, the futures rallied back up again. And it's just been this wild kind of ride. But yes, the internals gave the buy here, and all the news that has been swarming along around here between trade wars and Syria and everything. It's just been a choppy grind, but we just kind of like been going with that bias and looking for the opportunities, and trading them and managing them. But yes, we did get the signal, and then sentiment is neutral at this point, so nothing there. And if it continues to go higher next week, eventually sentiment will turn around. So and assuming that it does and pushes up here, option traders will start buying more call options, and it'll get to an extreme, and the whole cycle then begins to turn around. You can see the futures here. I made that lower low. They're starting to bounce up here, lower right-hand chart. These others, which I don't talk about in the letter that much, once in a while, because they're just day-to-day moves in breadth and sentiment, so they're really not meaningful unless they really hit an extreme, but sometimes they do. But this is what these slower ones are calculating, this breadth and this sentiment down here. So now it's a wait and see. It is Friday afternoon. Let's see this market can gain any legs here. You see, I was talking to you about, someone asked me about level 2 and time and sales. You just got the ticker here, and you can see the color change. So, in the moment, see that pinkish thing that goes by, that means they're hitting under the bid. So how meaningful is that? Not really that meaningful. There is selling, and that brown line that you can see on the ES there. So these are trader pivot lines. They're just, pretty widely followed as to, trading the E-minis, these trader pivot lines. And they're midpoints, and, the midpoints tend to be noise. Let's just take them off. If this is yesterday's close, I forget the colors. One is yesterday's high, and let's see what the weekly chart looks like. Still a mess. That's the weekly of the Dow futures. Qs look a little bit more convincing as far as a turn. This minder I have here showing what's happening. It goes blank after the market opens as to what's happening in extended hours. I didn't save that the other way. All right, everybody, we're going to take a little break here for lunch, and we'll be back at around 2:30-ish. We'll see what sets up into the close here for Friday. And if buyers want to show back up again, and whether we're going to go into the weekend with a red day or red candle trading below the open. And as I said earlier, most times, historically, whether it's the market or even a stock has spent this much time below its opening price, it usually doesn't get back above unless it's coming out of a bottom. But a few days up, as I said, pre-market, ideally, this would have traded for a while and gone higher, and then the profit taking would have come in, continuation, but it didn't. And transport's actually showing a little bit of relative strength here. All right, guys, we'll be back a little later, and we'll see where things are at.